Welcome to the short lesson regarding banking held by Professional Knowledge Factory. Today we are going to learn about a very important component under the monetary policy, which is the reserve ratio. What is a bank's statutory reserve ratio? A reserve ratio is a percentage of the deposits which commercial banks are required to keep as cash, which means from the deposits that the commercial bank gets, the central bank requires that the commercial banks hold a certain percentage as bank reserves in the central bank. This is directed by the central bank, and the reserve ratio is a key component of the monetary policy. If the reserve ratio is lowered, the bank can lend more money, which will increase the money supply. Which means, when the central bank decreases the reserve ratio, the amount of money that the commercial banks has to deposit in the central bank as bank reserves decreases, and the amount that they can lend to the public will increase. On the other hand, if the central bank increases the reserve ratio, it will slow down the economy. Why? Because when the central bank increases the reserve ratio, the commercial banks have to keep more money as bank reserves in the central bank, and they can only lend the portion after they keep as bank reserves in the central bank. So then the commercial bank will have to decrease the amount of money that they are going to lend to the public. Why? Because the central bank has increased the reserve ratio. If an individual deposits or invests rupees 2 million in a commercial bank, then the deposits of that particular bank will rise by 2 million. If a person brings in 2 million to deposit in the bank's deposit base will increase by 2 million. If we assume, let's take an hypothesis situation that the cash reserve ratio of a particular bank is 12%, then it will be necessary for that bank to hold money worth rupees 240,000 with the central bank. From the 2 million, 12%, the commercial bank is required to keep in the central bank as bank reserves. In this case, this commercial bank will be entitled to utilize only 1,760,000 for lending to customers or for investments. If I show the calculations as follows, a person brings in 2 million, out of which 12% the bank is supposed to deposit in the central bank as bank reserves, so it will be 240,000. So which means from the 2 million minus 240,000, which are the bank reserves, the bank will be remaining with 1,760,000. That amount the bank can lend or use for investments. Now let's look at the reserve ratios in Sri Lanka in year 2019 and 2020. The Monetary Board of the Central Bank decided to decrease the reserve ratio to 5% in year 2019. And here the second point you can see, in year 2020 they decided to decrease the reserve ratio more to 2%. This could be mainly because we as a country also had to face the COVID-19. And the central bank wanted the commercial banks to lend more to the public to increase the money supply. In order to do so, they reduced the reserve ratio so that the percentage that the commercial banks have to keep with the central bank will decrease, and the amount that they can lend to the public will increase, which will increase the money supply. This is a chart of the current reserve ratio and the previous year reserve ratio. As you can see, the reserve ratio has been decreased over the 2 years. I hope you got a clear idea regarding what a bank's reserve ratio is. If you want to gain more knowledge regarding this, please comment below, and also please follow our Facebook page and subscribe the YouTube channel. Thank you.